Hey everybody, good afternoon. Hope you had a great day today. Just coming on with another quick lesson for today. Today's lesson is going to be about multiple time frame analysis, how to look at the multiple time frames. I think one of the, if not the single most overlooked item in technical analysis when you are a beginner, for beginners, is multiple time frame analysis. Because when you're starting out, you don't really know that, oh, there's this, you don't know anything about the concept of multiple time frames. Most people don't. When I started out, I even started out using line charts, charts that, I mean, just one time frame, either the daily or I don't remember honestly what I used to use. But the point is, when you start out, you don't even know that you can actually have multiple time frames of the same symbol open at the same time. And so it's something that traders usually learn later on in their trading career. That's if they last long enough to get there. Luckily, I did, and I'm here to share with you the lesson. First, I just want to show you. We talked about I did a lesson yesterday. I want to show you yesterday's bar, what is a wide range bar. So today the expectation was to get a narrow range bar. 80% of the time, I would say. If you get a wide range bar, the next day you get a narrow range bar, or at least a narrow body bar, meaning the bar might be wide, but the body is very, very narrow. Where we open and where we close is typically is the same or in the same area. And before we talk about multiple time frames, there's another tip that I can share with you, and I went over this in the black room this morning, which is if you have a strong kind of a unidirectional move all day into the close, and at the close you get a reversal. If you do get a reversal at the close, this is the hourly chart. I can show you, maybe the 15 would be clear. Yesterday's move, so down all day, and then right towards the close, just the last 45 minutes, we had a pop into the close. That typically produces follow through the next day, because it is said that novices open the market, professionals close it. Not always, but if you get that pop, that reversal into the close, that signals what's going to happen the next day. So today's gap was expected, okay? Now, today's gap also broke the trend. This is a 15-minute downtrend, broke the trend, okay? The trend being that you have to have lower highs and lower lows. Moving average typically will be hugging price, and you can see today we gapped above both the pivot, the last pivot, and the moving average. And now the moving average starts to point up, to curl and point up. And then when you get that, now you have to understand that the next larger time frame is going to be in a downtrend still. Now after the 15, I use the 60-minute. Some people use the 30-minute, but I use the 60-minute because 15 and 30 are too close to each other. So now when you're looking for a target, so from the 15, where's your target? Well, the declining 20 on the next larger time frame. Does that make sense? Here's that uptrend. The stock or the market in this case, this is the chart of the Qs, should move up until we get to that declining 20 on the larger time frame, which we did. I mean, almost to the penny maybe. And now we get to the more interesting part. So the 15-minute uptrend worked, got us to target, and now we have a downtrend and a declining 20 on the 60, and we potentially have a sell setup. How do you play something like this? Let's say you were interested. I don't really trade the Qs because I can always find individual stocks that offer better reward to risk than the market and move more than the market. So I typically don't trade the Qs. But now let's say you wanted to take this sell setup. How do you do it? Well, you have to have multiple time frame alignment. You have to have this time frame has to be in a downtrend, which it already is, And before jumping in short, you have to make sure the smaller time frame, one time frame smaller. You don't need to go to the 5, the 3 minute, the 2 minute, the 1 minute, but just one time frame smaller has also to be in the same direction. It has also to be downtrending. But we know that the 15 minute was uptrending. So what do? Okay, so what you do is you wait for a concept called a buy setup failure. See this? 3 or more red bars to the rising 20. We're supposed to get some kind of a bullish reaction, which triggers a buy setup. Once you take this bar's high out, then you have a buy setup. And the buy setup failure, if we fail, if we take this out, the low, 172.40, that's what we call a buy setup failure, because this V pivot or this buy setup now failed. And that would be the entry for the 60-minute if you wanted to play the 60-minute sell setup. Now we ran out of time, but you can see it worked. I typed it into the black room as an idea for those that like to do the Qs. Short under 40, under 172.42 should have been. No, 40. There it is, 40. 172.40, stop over the pivot. Okay? And then ran out of time, but it worked a little bit. I mean, dropped 40 cents. Actually dropped 54, right? At some point, at the lows. But that's the concept of multiple time frame alignment and multiple time frame analysis. There wasn't a whole lot today to kind of go over with you from today's trades. I usually like to do that. I closed out of my P&L. Let's see. Let me close out of these. And I think it is the position summary. So let me just, okay, there it is, opened, perfect. Let me show the positions, what I did. Again, there wasn't much. The last trade I took was at noon, at 12:15, I believe. Okay, so now the symbol should come up. The first trade I did was while on the mic, and I called out the numbers. It was over the whole number, over 21. The SPPI was a nice trade, and I closed it out at 69. Let's go back to the 1 minute. This is a gap. You know me by now, most of you. I like to focus on gapping stocks because first, they move a lot, and second, I can read what's happening to the individuals, to the traders that are in the stock. In this case, 3 red bars. The majority has been selling or shorting. So with today's gap, they're going to be trapped. When they're trapped, they're going to look to cover. Their covering is the same as buying. They're basically buying the stock, which will actually add fuel to the fire, propel it higher. And it had, I think, a 1, 2, 3. Let's take a look on the 1 minute chart. A 1, 2, 3 pattern, sort of a 1, 2, 3. 1, 2, and the breakout. Over the whole number also, that's significant. Over 21, stop 2069 or 2050. And then it popped. It got to 80, but I got filled at 69 on the way out. So I know this may not seem like a huge move, but that's what did we say this was? That's an 80-cent move. In how many minutes? In 2 minutes. 1, 2, 3, let's say. So on a $20 stock, $21 stock. So that was pretty good. I didn't get filled a lot, so I tried 2 orders here. And I think I got filled 1,300 shares. So I didn't get filled that much. I tried 2,000 shares and I got out. This was, I didn't have the time to type it into the room, but for those that were tuning in, everybody tunes in at the open, had the chance to participate because I did it live and verbally. And then the other one was, the other one that I typed into the room was the CBIO. Unfortunately, the AKAO, I just couldn't get filled. I tried multiple times. I barely got filled a few hundred shares. I'll show you this, the AKAO in a minute. The CBIO was on my daily watch list as a long because it had a nice hourly base breakout pattern. And I found it to be gapping today, this morning, and at lunch, well, here's a 15-minute chart. It's a nice breakout. So played the breakout long. Let me see. I also closed out of the black room. I forgot to. I wasn't planning on doing a video today, but just to see what the numbers were. Oh, I can't scroll back up. Uh, so let me see. I don't think I can. No, that's the cues. Okay, not a problem. But anyways, it was over the high of the day, which was 40, I believe, 11:39, 11:40, and then the stop was under 24, so 11:24, and then a nice pop, and then I trailed it 1 minute bar by bar. So let's go back to the well. Let me show you the 5 minute. You might be able to see it better on the 5 minute. So here it is, nice base. Notice the equal high and then the higher lows. So you can see it getting tighter and tighter, ready to break out. It popped, and then I trailed it 1 minute bar by bar, which trailed me out I think somewhere there, but this is the 5 minute time frame, so you'd have to go back to the 1 minute. Let's see, show you real quick. Got a little thin. It was a little thin, the CBIO. Oh, here it is, and a little spready. So under 60 basically is where I took it. Nice little pop on the CBIO, and then I think the last one that was that made a little bit of money. These didn't, as you can see, they didn't make or lose anything. I mean, just very, very small. And then the one that made a little bit of money was the AKO. This was the best gap today, but I got involved in the SPPI at the open. And at the open, you can only really see one thing. I mean, I can only trade one thing at a time, right at the open. And you can see it went right at the open. Second minute of the day, I had to be in it, or else it was gone. Now, I did notice it after I got out of the SPPI. Tried it short, but got filled a few hundred shares. It wasn't much, and then covered it there. And so it made 300 bucks, but it could have made a lot more. This stock is hard to, I mean, not hard to borrow, but it's on an uptick. Closed out of all my level twos. So let me see which one. I think that's the level two. Okay, so here it is. AKAO. SSR. Short sale restricted. So it's basically a circuit breaker stock. So those are hard to get filled on when you're trying to short, unfortunately. And those are the ones that I like to do, actually. But those were kind of my trades for the day. And then last trade I did was the CBIO. So I was done today by 12 noon or 12:15. Let's see. Okay, so that will do it for today. I hope you enjoyed today's lesson, and I will talk to you sometime soon. Take care, everybody. Have a good night.